Hello, good morning and welcome to our webinar. I'm Catherine Biscoe, a partner in Buzzcott's charity and not-for-profit team. And before we get started, I just want to go through a quick bit of virtual housekeeping. So as webinar attendees, your computer cameras and microphones are off, but you will be able to communicate with us throughout the webinar. So please just type your questions at any time in the Q&A chat function. So if you're not familiar with this, you'll be able to find this option at the right-hand side of your screen, and it looks like two speech bubbles with a question mark in it. So you can type in your question and that will be sent directly to us. To protect your privacy, all questions will be kept private. Please also note that the session is being recorded, so we'll make this available to rewatch after the event, and you will also receive a copy of the slides. So if we turn straight onto the agenda. For today's session, I'm joined by Saatchi Blakemore and Catherine Peacock, and over the next hour we will provide a refresher and overview on the principles of good governance and how this applies specifically within the Academy Trust sector. We will then look at bringing some of the detail to life through 2 case studies, and finally wrapping up with what we are seeing as emerging trends and challenges. There will be some time for questions at the end, so please do add these via the Q&A chat function as we go, and then we will also follow up on any remaining questions after the event if we don't have time to cover everything. So if we can make a start. On my next slide, really I'm just starting off with some scene setting. So really, what is it that dictates the governance of an Academy Trust? And onto my first slide. There are various documents here that are relevant, so from the public sector, from the education sector, also from a charity's perspective. So looking initially at the role of the board as set out by the Department for Education. So the DFE has a governance handbook, last updated in October 2020, and within it the department has identified 3 core functions for a governing body to fulfill. So this is first of all ensuring clarity of vision, ethos, strategic direction of the trust. So really this covers the overall aims and objectives of your Academy Trust. Secondly, looking at holding executive leaders, so the SLT, to account, and this is for the educational performance of the trust and also performance management of the staff members. And then finally, overseeing the financial performance of the organisation. So this includes making sure that financial controls are in place and operating effectively, making sure that the trust's money is well spent, so effectively delivering that value for money. Next slide, please. So moving on, we are going to look at some of the various different regulators that are involved in the governance for an Academy Trust. So, of course, the Department for Education via the ESFA is the key body here. So they are the principal regulator. But as Academy Trusts are exempt charities, they also have to comply with charity law as regulated by the Charity Commission. And the Charity Commission actually does have a lot of guidance available in the areas of governance, and a lot of that does overlap with DFE guidance, but that's why we want to cover some of those charitable aspects today as well. In addition, as companies limited by guarantee, trusts also must comply with company law and the filing requirements of Companies House. And then finally, on the education side, you have Ofsted, so regulating the educational and safeguarding aspects. So as governors or trustees of an Academy Trust, it really is key that you understand the requirements of all these different regulators, and in particular, we'll see how that sort of sits in the context of governance of your trust. Next slide, please. So we will have a little look in more detail at the Charity Governance Code. This isn't sort of specifically applicable to Academy Trusts, and it wasn't really designed for educational organisations. But as we will see, a lot of the themes coming out here from the Charity Governance Code are very applicable to an Academy Trust, and we will see some of those themes coming through in some of the other guidance documents as well. So referred to particularly in the Academy Trust handbook, and so you will be familiar with some of the terminology here. So the Charity Governance Code was set up by a charity sector steering group. It's not mandatory, but it does give some useful guidance around themes for governance for charitable organisations, and it is best practice. It was updated a number of years ago now, so point 6, which was previously just covering diversity, was expanded to cover equality, diversity and inclusion, as there was more focus on these areas. And then there was also in the update an expansion around point 3, which is integrity. So I will look in a little bit more depth at some of these different areas in the code, and really what this means for the board in terms of what you should be thinking about. So the first pillar that you'll see here is called organizational purpose. So this is really about your vision, ethos, aims, purpose, the strategic plan of the trust, the agreed outcomes. And as you can see, this ties back to that first core function of the board as defined by the DFE, which we saw on the first slide. The second pillar, leadership. So here the emphasis is on the collective responsibility that you have as a board for leading the organisation. So this is making sure that the values of the trust are being reflected in how the trust is run and the way in which the board is operating, and that you as board members have the necessary commitment and the time to be able to dedicate to ensure good governance. The third pillar, integrity. So this is around promoting public confidence, always acting in the best interest of the trust and its pupils as key beneficiaries. And it's also important here in terms of dealing with any and managing any conflicts of interest. Fourth pillar around decision making, risk and control. So this theme really does come across strongly later on, as we'll see in the Academy Trust Handbook. So this covers the framework for decision making, monitoring the work that the trust does, ensuring there's clear delegation and internal control frameworks. And this has reference to risk management, audit and assurance as well. Board effectiveness. So this is looking at how effective your board is. Do you have a strong board composition, a good mix of skills? It leads into the diversity point as well. So how do you address diversity of the board? And really ensuring that you are working as an effective team and that you are continually learning as a board and developing over time. So really there's reference here to governance reviews as well. And this is something that the DFE does focus on, and the Academy Trust Handbook in particular really emphasises the value of external governance reviews. Pillar 6 is equality, diversity and inclusion. So this is aiming for these values to really be embedded within the Academy Trust. So this is an area that many charities and educational organisations are focusing on and looking into at the moment. And the board needs to be assessing how well they are doing in this area. And transparency in this area is key as well. And then finally, the last pillar is on openness and accountability. And this is also something that's emphasised heavily in the DFE's handbook, as we will see. So this covers openness and transparency with all of your stakeholders. So really ensuring that there is that appropriate communication with all of the relevant groups. Next slide, please. So this slide is now from the DFE's Governance Handbook and Competency Framework for Governance, and I won't go through all of these boxes individually, but you will see that many of the themes here are sort of replicated from what we were just discussing from the Charity Governance Code. So, for example, the focus on strategic leadership, values, decision making, strong risk management, accountability. There's a focus here on financial accountability, but also for educational outcomes as well. So how does the board work to ensure that all of these themes are being met and that you're working effectively as a board? So that sort of board evaluation aspect comes through in the DFE's Governance Handbook as well. Next slide, please. But really the key document for an Academy Trust, so all of these sort of other governance codes and other documents that we have seen to all feed into it. And this is the ESFA's Academy Trust Handbook. So the latest handbook is effective from 1st of September 2023, and this must be followed by all Academy Trusts as a condition of your funding agreement. So it is really important that as board members you are fully aware of the requirements of the handbook. Many of the areas that we will sort of touch on here over the next couple of slides will also crop up in our case studies later on. So hopefully that will bring some of these points to light for you as well. So what does the Academy Trust Handbook aim to do? So really it's ensuring that board members particularly understand their roles and responsibilities and how that drills down into some of the very specific requirements that the ESFA has in terms of reporting and monitoring activity of an academy trust. So the handbook starts off by setting out those roles and responsibilities and defining them in the context of an academy trust. So that includes looking at members, trustees, the role of the accounting officer, the CFO, the clerk or governance professional. And the handbook does set out that a governance professional is needed and should be appointed. And this ensures that there is transparency around the governance arrangements of a trust. As an academy trust, you should be putting details of your governance arrangements on your website and making it really clear to your stakeholders. The next point on the slide here is the Audit and Risk Committee. So this is really relevant for a lot of the sort of audit and financial areas that we've talked about, particularly the audit and risk management aspects. So as an academy trust, you must have an Audit and Risk Committee appointed by the board. If your trust has income of over 50 million per annum, then it must be a dedicated Audit and Risk Committee. If your income is below that threshold, then it can be combined with another committee, such as a finance committee. But if there are separate committees, so finance and audit, then the trust handbook specifies that the chair shouldn't be the same for both those committees. So if you are a board member, but also a member of the audit committee, there is an HM Treasury audit committee handbook, which is linked through from the trust handbook, which sets out key roles and responsibilities and which would be useful to review. The Academy Trust Handbook then goes on to look at some of the accountability and financial requirements. So Academy Trust should have an internal control framework, scheme of delegation, looking at strong financial planning, including budgeting and monitoring and reserves management, ensuring that you have systems and procedures in place for procurement, so leading to that value for money. And this also covers the setting of executive pay, and that you have clear and transparent policies in the areas of whistleblowing. So if anyone either from within or outside the trust has any concerns, that they are able to whistleblow and raise these because you have appropriate procedures in place. So next slide, please. And I'm continuing here with the Academy Trust Handbook. So just a few other areas to mention where the handbook is really quite prescriptive in terms of what trusts need to do. So the first one here are the requirements around internal assurance and scrutiny. And this is the review of the trust systems and controls by someone that's independent, objective, suitably qualified. And the Academy Trust Handbook stresses that this must not be completed by a member of the senior leadership team. Obviously, they wouldn't be independent. And that it should be driven by the Audit and Risk Committee through the risk management process. The trust can deliver the internal scrutiny in the way that's most appropriate to its own circumstances. So it could be that they have an in-house internal auditor, bought-in internal audit service, which is probably the sort of option that we see in practice most frequently, or it could be the appointment of a non-employed trustee or independent peer review, or perhaps a combination. And the ESFA last month did publish an internal scrutiny good practice guide. Again, this is linked through from the Academy Trust Handbook, so probably also worth a review as part of the Audit and Risk Committee remit. We then have risk management. So this is emphasised in the Trust Handbook as board members, making sure that you have strong risk management processes and frameworks, and that your risk register refers to things such as cybercrime, so as an emerging area, and this is a risk that we'll hear a bit more on later in the webinar. Ensure that you can manage conflicts of interest and related parties. So this is a key area of focus for the ESFA, and there are strict rules within the handbook in terms of which transactions should be reported to the ESFA, which ones need to be approved by the ESFA in advance. So it is really key that as board members you are aware of these requirements around conflicts of interest. Also then, in addition to the approvals required for related party transactions, there is also pre-ESFA approval required for certain types of transactions, such as non-contractual severance payments over £50,000, for example. There is a really useful table in section 5.65 of the handbook, and it summarises all the freedoms and delegations that Academy trusts have. So again, important that you are familiar with those. The handbook also covers external audit in terms of the appointment, selection, and sort of review and evaluation of the external auditors. And then also the regularity and propriety aspect. So the statement in the accounts, which is made by the accounting officer, the review that the external auditors do as part of the year-end audit to be able to give that conclusion on regularity, propriety and compliance within the trust. So as a board, you really need to be ensuring that the use of government funds is appropriate and that there are controls and systems in place so that expenditure is in line with those expectations of the Department for Education as the funder. So really that was just a quick run through of the various frameworks and documents that will feed into the governance of a trust, and we will see some of these coming through in the next session on our couple of case studies. So I will now hand over to Catherine to cover those.
Thank you very much. So good morning, everyone. For the next few minutes, I'd like to talk through some of the example case studies. I've got 2 examples to take you through today, and I'd like to highlight both of these are fictional, but the issues that I've put in are those that we see in the sector on a regular basis. So if I could have the first slide, please. We'll start off with a growing multi-academy trust, Bright Start Mat. This organisation started from a small group of local schools a number of years ago, and it's gradually grown over time as partner schools have merged into the trust. One of the key distinguishing factors for the local governing bodies is that they're very keen to preserve the character of the individual schools that have merged into the trust, and so there is quite a high level of autonomy, which presents some challenges when the central team are monitoring expenditure and budgets for local schools. So for a number of years this worked very well. Then during 2021, 2 additional schools joined the group, joined the MAT, and they had quite different financial systems, different payroll providers from the existing schools. The central finance team didn't expand, so that team stayed the same size with quite significant additional responsibilities. And one of the things that happened was that the communications with the new schools perhaps didn't quite receive the priority that they should have done. At the end of that year, the Chief Financial Officer resigned, and their replacement joined the week before the annual audit started in October 2022, which must have been very, very challenging timing. And on the first day, the new CFO discovered that one of the 2 new schools had suffered an external invoice fraud. Someone had sent a fake invoice. The finance team locally had felt pressured to pay the invoice immediately, and it had turned out to be a fake, which did lead to quite a significant financial loss. So on their first day, CFO needed to start a review of processes. How did this happen? How did it get through the system? How is it authorised? What do we need to change to make sure this doesn't happen again? And this, at the same time, or very shortly afterwards, they also discovered there'd been a bank error, and one of the schools had had a direct debit payment processed that shouldn't have been, and that had taken that school into an overdraft position for a very short period of time. It was rectified the same day, but there was that blip where the individual school had gone overdrawn. From an overall trust perspective, they were fine. They weren't into an overdraft position overall. There was plenty of cash in the rest of the trust, but as part of the CFO's controls review when they joined, that was one factor, making sure that situation can't happen and shouldn't happen. They were also very keen to implement additional controls on expenditure, making sure there's approval for local school expenditure and authorisation of payments, including a purchase order system, and cybersecurity training was made mandatory for all staff. There's a definite effort to not make sure people know that they shouldn't be pressured into making a payment. So quite an interesting start for the new CFO. And then they moved into the audit. And during the audit process, it did become apparent that there were some issues with collating information for the financial statements, particularly for one of the new schools, that there were a lot of spreadsheets of the financial system, and there were difficulties with preparing the draft accounts. We also discovered at that stage that one of the TPS returns had missed the deadline because the payroll provider hadn't actually produced the records to be submitted, so that needed to be sorted out fairly urgently. The solution to this, because this is one with a good outcome, there is a solution. The CFO had a good relationship with the chair of the Audit and Finance Committee, so they were able to have a conversation and arrange some additional support for the finance team in the short term so that the audit could be completed and the ESFA accounts filing deadline could be met. This was mainly around support with the accounts preparation process so that the finance team could concentrate on working with the individual schools to collate information, and that meant that everything was done when it should have been for the F&A committee meeting in December. So after that process was completed, the recommendations that came out from the audit did include reviewing systems and processes across the schools so that everything could be put onto the same system with some central access for the finance team. And at the same time, anything that was on the spreadsheet was taken off the spreadsheet and put in correctly to the financial system. And that meant that the central team, while still letting the individual schools keep their character, keep their autonomy, could actually have visibility of what's going on, what records were, and have a bit more control over budgeting. There were some other projects that happened during that next financial year, mainly around reviewing restricted funds, what the purpose of those was, and this was particularly important for the new schools because when they joined, they brought in their own funds from past fundraising campaigns, past donations, and it's very important that the purpose of those is not lost when there is when the school joins a new trust. So reviewing those and making sure that that was clear. The F&A committee were very involved with the whole process. They were very engaged both with the finance team and also with the auditors, and they were keen to implement the recommendations from the audit process. So that very healthy process between the executive team and the F&A committee is really important for good governance. If those two bodies work together effectively, then that's a positive start for the governance process. There were a number of changes that were made during 2023, and that the main thing was increasing the numbers of people in the finance team centrally. So the trust made the decision that actually having an extra financial accountant would take the pressure off the CFO and head of finance and would allow them to focus on some of the more higher level issues. There was some continuing support with the accounts preparation while this bedded in, but the feedback from the 2023 audit was that the process had gone much more smoothly and everyone involved felt that they actually had a better understanding of how the process went and how the financial statements actually feed in to the governance environment. And the trust has now stabilised their systems and controls, and they're now feeling positive about the future. And after a bit of a consolidation period, they're now looking to grow further once they identify a suitable school to join the trust. So that's an example of having things go a bit too, maybe grow a little bit too fast, and then needing the systems and governance processes to catch up with that growth, and then consolidate, strengthen the systems, and then move on to the future. So if I can have the next slide, please. My second example is also a multi-academy trust. And in this situation, I could probably subtitle this as what could possibly go wrong. This is an example where there have been a number of governance failings over quite a long period. The case study starts off in 2020 where a local paper got involved. A letter was sent from a group of parents, including some teachers, to the local paper expressing some concerns. And if something like that happens, that normally means that there's been a governance issue sort of bubbling below the surface for a while, and someone has got to the point where they just can't not say anything anymore. So that's the beginning of the scenario. Ofsted then came in, whether or not that's related, I wouldn't like to guess, but the Ofsted inspection graded the MAT as requiring improvement, and some of the specific points they raised were around governance. So at that point, there were quite a few concerns being raised, and the parents at that point were also making some fairly public comments that they felt that the culture of the MAT had significantly changed and there needed to be something done. And then during 2022, things went from bad to worse. The CFO left the trust and was not replaced, which meant that that link I was mentioning a moment ago between the executive committee, executive team and the board and the committees was weakened because the CFO, along with the head, is that one of the key links in that process. And at that point, that was when the ESFA started to get involved and launched an investigation into the governance concerns following Ofsted and also the ongoing issues. And during that review, it became very apparent that there were a number of issues that needed to be dealt with. A new head teacher was appointed and also a number of new trustees, and some of those trustees were recommended by the ESFA as having experience in governance and in resolving this sort of situation. When the final notice to improve report was received by the ESFA during 2023, there were a lot of issues on it, and I'm going to pick up some of the key ones. First of all, board effectiveness. The culture of constructive challenge between the governors and the executive team is really important, and in this situation that had been eroded, which meant there was a situation where there were a number of concerns for the ESFA, things like the governors not seeing management accounts as a requirement under the Academy's handbook. Evidence of the budgets being approved by the board wasn't there. This was particularly important because this particular MAT was running at a budget deficit without carry forward reserves to cover that. So that's one of the key red flags for the ESFA, that you need a balanced budget unless it's planned spend of existing reserves. And the minutes from the board and audit committee meetings didn't have enough detail to record the oversight and scrutiny from the board. And in that situation, it may well be that the board had been appropriately challenging budgets and projections, but if it's not documented and recorded in the minutes, it's difficult to evidence that when you're being reviewed. And generally, the financial reporting was considered to have been weakened in the absence of a CFO in post. So that's around board effectiveness. Conflicts of interest was another area that the ESFA raised, as there wasn't a register of trustees interest in place, and that gives the risk that it might be possible to enter into a related party transaction, which would need to be notified to the ESFA, without realising if you don't have that full list of trustees and their connected parties' interests. So that's an important part of governance. I keep coming back to relationships with auditors, and this was another area of concern for the ESFA, that this Academy Trust had filed their accounts late for both 2021 and 2022, which is another red flag. And and there was no evidence that the auditors and the board had reviewed the financial statements together at either a board meeting or F&A committee meeting, and the recommendations from the auditors over a number of years hadn't been addressed, and the recommendations hadn't been dealt with, and also there was no internal audit work undertaken during 22 to 23, which is again a regularity breach. So a few issues around the process of scrutiny of the trust's governance and also its financial records. The worst in the accounts disclosure issues, I'm not going to go through those in detail, but the key point was the lack of disclosure of salaries of staff earning over £60,000 a year. That was rectified probably 10 minutes after the ESFA sent in their notice to improve. That was put on the trust website, but even so, it's really important disclosure that is made, because it's one of the really sensitive areas in the accounts. And then the ESFA recommended a number of policies should be put in place around whistleblowing, safeguarding, management investments, and that a business continuity plan and risk register had been updated for a number of years. So this really is a perfect storm example. What could possibly go wrong? Individually, perhaps some of these are less significant than others, although there are some red flags in that list, but taken together, there was an awful lot that needed to be resolved from a governance perspective. So what's the outcome? The new head teacher was able to make an impact and make a lot of improvements and changes in conjunction with the trustees, including the new trustees appointed. But overall, the decision was made by the ESFA in conjunction with the board that actually this trust had reached the point where the best outcome would be for it to merge into a larger trust, and this happened earlier in 2024. So I think this is a cautionary tale around the importance of getting governance right. This was a situation where all of the ESFA's concerns were around governance rather than the quality of teaching and the educational outcomes of children. So it really does highlight how important it is to spend the time on governance, to focus on that, and to make sure that you get the basics right. So I'll now hand over to Sachi to talk about emerging trends, but if anyone does have any questions, we'll be able to pick them up at the end of this session.
Okay. Thank you, Catherine. So what I wanted to do really was talk about a handful of issues that we've seen particularly emerge over the last 4 or 5 years. They are areas that I would suggest as trustees, as governors, you should probe bit more challenging in queries and getting the assurance. They're really responsibilities you need to make sure that the trust is accountable for. And the issue really at stake is that if they're not properly probed and the response that you come up with isn't adequate, there can be adverse impacts. And the one that I want to start on the first topic, which is on the next slide, please. Is really cybersecurity. What we've seen, and no doubt you may well have experienced it firsthand, is that there has been, certainly in the last 3 or 4 years, a significant increase in attacks to educational organisations, including academies. And in some ways, the response of why the increase is fairly simple. There are lots and lots of users in academy trusts. There are therefore lots of data entry points for attackers. And you hold a lot of data combined with the fact that possibly, unlike say large corporate organisations that have big budgets to mitigate any risk, academies aren't in that fortunate position. So you are very much a target for attacks. And what does it mean? What have we seen? Certainly in the last 2-3 years, we've seen academy trusts that have had to pay out literally in terms of hundreds of thousands of pounds. In some cases, if you're covered by insurance, and the RPA now does include cybersecurity insurance, that cost has been mitigated or partially mitigated. And the risk always is that, and I've certainly worked with a organisation that when it was attacked, it didn't have that insurance. So you can imagine the financial impact, but more importantly, there is the reputational impact. And if you think about the sort of the operational disruption, if you have to spend 2 weeks closing the academy trust down to clean all the whiteboards, to clean all the devices, all of that, and if it's possibly at a time when exams are taking place, the impact is absolutely huge. It's very disruptive. And of course, you know, as the sector matures and everyone learns from the unfortunate incidents that happened in the sector, really it's you know, there are things that you can minimise your risk, and as I talked about, insurance is one thing. The ESFA is strongly encouraging organisations to take up Cyber Essentials accreditation. I have heard that at some point it may make it mandatory for organisations it funds, but that's not currently the case. So it is something that if you're not on that step of getting assurance, it's certainly worth considering, but it's a very basic level of assurance at the same time. What you need to think about in terms of good practice is really proactive. So it's great having you know, procedures and policies and steps you take to minimise that risk. What I often find is that all of those happen, but they happen without a proper risk assessment, a thorough risk assessment. And what good practice really should be, and I've certainly started to see that in a few of the audit committees I've attended in the last 6 months, is that there is often a session that's devoted to this particular area, because it's high impact, high likelihood, you know, combined. It's really a sort of a red risk on a risk register. And therefore it merits attention. So I've seen audit committees literally with maybe the head of IT or the finance function, so the IT function presenting what the specific risks are for the Academy Trust, and they will differ. And what are the mitigating actions that the Academy Trust is undertaking, and then the question to be asked at the end is really all about, are there more actions we could take, and also to learn from the IT function what the cost of those are. So it's really to make sure that the risk assessment happens first, certainly at the Audit and Risk Committee. And I would say that the sort of heightened risk around this, this is a topic that I think all board members should have an awareness of where you are in your own journey to protect against cybersecurity. The next area, and it's sort of related, and fraud may happen through cyber, but I'm talking fraud in the wider sense. And obviously, Catherine gave an example of where it happened in her case study. I'm always really surprised when I hear of these incidents from my clients, because they aren't often sort of complex frauds, and complex frauds are on the rise, but they're often simple things, and exactly the sort of thing that someone asks you to change the bank account details, and that's automatically happened, money leaves the building. And again, the good thing is that the good practice would be to look at it rather than having just thinking about policies and procedures, which a lot of academies do. I've been on the governing body of an academy trust and a college, and I'm well versed in knowing about various policies that you should be adopting and being happy that you're mitigating that risk. But the piece that is often missing is the risk assessment. And the Academy's Trust Handbook is very clear to say that the governing body must be aware of the risk. And in order to do that, one way of best practice would be at least once a year through the Audit and Risk Committee, there is some presentation of what that fraud risk is for the organisation. And I think what it will help is to flush out risk in a wider sense, because when people think of fraud, they often think of money leaving the organisation, and it's often deemed to be external parties, but there is a real internal risk. If you think about it, an academy trust will have a large estate. There will be contracts at stake that you award to third parties. There will be pressure to buy goods and services, to sign into leasing agreements, etc. And all of that could be through what I call sort of subtle fraud or subtle influence that results in contracts being awarded, but maybe not to the right party. By having a proper discussion at least once a year at the Audit and Risk Committee, I think you can have a wider view of what those risks are, and then formulate what the response plan should be for the Academy Trust. What I've done on the slide, as you can see, that there's actually a checklist for Academy Trusts. It's called the Anti-Fraud Checklist. It's got a set of questions, about 10 questions on there. Very useful if you haven't been through that with your own Academy Trust to go through it. And it starts off to say that the risk will be different for different organisations. Therefore, not all the things it's stating on there will be applicable. But I think as a starting point, I would strongly encourage that you start with that, and that may help you develop both the risk assessment and your response to fraud. The other aspect which Catherine touched upon was really around sort of weaknesses in financial reporting. And I just want to talk about it in a little bit more detail, in the sense that Academy Trusts generally are very good in preparing monthly management accounts, which they're expected to prepare and at least share with the chair and the CEO. But what I have noticed, certainly in the last year or so, that the accuracy piece around the management reporting is possibly not as robust, and there have really been instances that there's been in-year reporting of results to governors, to committees, and then you come in and do the year-end exercise, and the year-end exercise, by which I mean the year-end statutory accounts and audit, and the financial position that's finally posted is very different. And there's a reason for that. There's several reasons why that may be, but some of the causes, the root causes that we've come across where you end up in that position is, you have an audit. Typically there may be some adjustments, hopefully not too many if you're well prepared, but you may also have lots of audit adjustments. Now, if those audit adjustments are not posted onto the accounting system on time once the audit's finished, and then you're using that accounting system to prepare the management accounts, and that those are being presented to governors, if you haven't done the opening position right, your results reported are going to be incorrect until you have the next audit. So I think it's definitely worth, as audit, risk and finance committee members, certainly in January, by the time the audit's finished, the first question that should be asked is, are we happy that this reflects the correct opening position for the Academy Trust now that the audit has been finished? I have actually seen at least 2 instances in the last year where decisions were made by Academy Trusts which were in essence inaccurate decisions because they didn't have the right financial information, and they were decisions around both in terms of hiring staff and restructuring, and then there was a surprise at the end when the audit came along that actually either they had more funds or a lot less funds than they thought they did. So really important thing. Couple of other things related to the accuracy piece that I think the Finance and Audit and Risk Committee need to be satisfied is understanding the basis in which those management accounts are prepared. You have currently a choice of either doing it on a cash basis, and certainly if you're a larger, more complex Academy Trust, you may do it on an accruals basis, which is the more rigorous way. But I have occasionally seen people who adopt a hybrid, which is not allowed, where they post prepayments because they're easy to post and they don't do accruals. You can just imagine that the sort of the expenditure position is underreported. So it's all of those things, is that when you have those management accounts, what is the basis? Is the opening position correct? And the final thing I'd say is also things like, if you have, as you do a capital estate, there will be a lot of costs, some that are expense, some that are capitalized. Some Academy Trust will only engage with that exercise, do I capitalise, do I expense, either at the year end or not sufficiently. And again, if you're not doing it consistently and fairly regularly, what you report as your budgeted, your forecasted position, your actual, won't be accurate. So I would ask the committee members that are just certainly a bit more sceptical when these results are presented and asking the right questions. The next one is, Catherine definitely touched upon follow-up of recommendations. What I won't repeat the same point, that they are really important and the ESFA does monitor them. I think the thing in terms of good governance is when you are presented with recommendations from either your external auditors and your internal auditors, there should be things that either give you assurance or possibly are red flags, and again, therefore needs a bit more probing. So the sorts of things that I would suggest to you that could be red flags, and obviously if there's lots of recommendations from prior years that are not resolved, that should be a red flag. I know certainly some of the Academy Trusts have had resourcing challenges, as most staffing challenges, as most organisations in the economy have, because the lack of staff has meant there's a lot of work to be done by a smaller pool of people, but there's also been a lot of churn. So some of these recommendations may not be dealt with just simply because you haven't got the resources. But you can also imagine in a court of law, as a trustee who's taking the legal responsibility to say, well, we didn't deal with these issues because we didn't have enough staff, probably won't hold for too long. So sorts of other red flags to think about is, are you getting lots and lots of recommendations? Typically from an audit, because we are looking at things from a fresh pair of eyes perspective, I think it's normal to get 2 or 3, 4 recommendations, but if you're getting 9, 10, a lot of them are repeats, a lot of them are graded as A or red, high priority, they should be flags to say, why are these things not being dealt with? And they may lead to the bigger question, is there a skills issue that needs addressing in the staffing of individuals who are looking at these finances and controls? Is it about is it some sort of structural issue? Is it about getting more people in? But I would urge that each audit committee keeps a log to make sure that you're doing your bit, that these issues get resolved. The minutes, the agenda should have an action log of everything that the auditors have said, both us and the internal auditors, and are they being cleared? And so at each meeting, you're going through that exercise, so you're getting reassurance that these areas are being dealt with on a timely basis. I think the final thing I wanted to say really was on reserves, and in terms of reserves, that's the funds that you don't spend that you want to hold as an Academy Trust at any given point. And of course, there are very valid reasons for holding funds and not spending everything. That includes everything from your cash flow, your working capital management, to having something for emergency, contingency, to actually future plans. So absolutely, Academy trusts are expected to hold reserves. And the ESFA is very, very clear in the Academy's Trust Financial Handbook that the level you set that policy of what is the level of reserves I want to hold for my Academy Trust is down to each individual trust. So they are not dictating what that should be. However, they have provided guidance and quite helpful guidance, certainly in my view, over the last couple of years. So last year in 2022, they did say, and they did begin to ask Academy trusts that hold more than 20% of their funds, 20% of their operational income on an annual income, operational income, 20% of that is held as reserves at the end of the year. They were asking questions, how do you plan to spend it? Because possibly it may indicate it's too much. And this year in autumn 2023, they gave the lower parameter, which is we may ask questions if your reserves are less than 5% of your operational income at the end of the year, potentially suggesting it's not enough. So again, these are parameters, but they are very mindful that you may go outside them for very valid reasons. So the issues that I am seeing, there's two issues. I think overall, most Academy trusts have a policy, and you need to have a policy. It's a requirement. You also need to disclose it in your financial statements, and you need to report against that policy. However, I have seen instances where there is, well, we're happy with the level we have, but there's no justification for what the policy should be. And I think it's okay, maybe if you're a very new Academy trust and you need a bit of time to formulate that level, but it's not really acceptable beyond a short period of time. So I think as governors, when you're presented with the budget to approve, you should also be asking, what is our policy? And of course, as things change, circumstances change, that reserves policy can also change in terms of quantum, and it doesn't have to be fixed. It can be a range for the Academy Trust. But I think more the issue is that I often find that there isn't the awareness of what the level of reserves is for the Academy Trust or the policy until maybe the year-end statutory accounts are prepared and there's a sort of a discussion around that as to these are your reserves position. So I think, again, both not just as audit, risk and finance committee members, but also just as governors, I think it's important, first of all, to ask the question, are we happy that we have a reserves policy, and are we agreed that it's the right policy for us? Secondly, that you remain aware, not just because of the end of the audit cycle and the statutory accounts, you become aware of what the level is for you. I would suggest a good set of management accounts, maybe not monthly, but at least quarterly, should have some commentary on where your reserves position is, so you know of this as it happens through the year. And if you are exceeding the sort of 5 and 20% parameters, you need to be satisfied in discussions with the executive as to why they are that. And if you're asked questions, I think certainly if you're having to respond to the ESFA, any response formulated should be discussed certainly with the Audit, Risk and Finance Committee and other governors. So you're aware the question is being asked, and you're aware and you're in agreement with what the response is. That's all I have to say. I have suggested a couple of links aside from the fraud checklist that you may want to visit. There is some really good guidance around cyber, and the NCSC website, really good. I've used it myself as a governor, and there is plenty of material the ESFA is also issuing, so that's also worth a review. That's all I wanted to say, but I'm very happy to now open it to the Q&A. Thanks.
Thank you very much, and thank you very much for your participation during the webinar. There are quite a lot of questions in the chat, so we will do our best to answer those now. But as I said at the beginning, any of those that we aren't able to answer, we will come back with a follow-up as part of the overall follow-up after this event. So I will actually just start with a clarification question, a point of clarification to Catherine Peacock, which was just around the threshold in terms of salary disclosure. So perhaps if you can just pick up on that one.
Thank you. Yes, just to confirm that the £60,000 threshold I mentioned is actually the accounts disclosure threshold. The Academy Trust Handbook, paragraph 2.29 in the 2023 version, is absolutely clear that the threshold for publication on the website is 100k. So hopefully that resolves that point.
Thank you, Catherine. Then there was also a point of clarification around the committees, which I covered in the first session. So that was whether the chair of the Trust Finance Committee could also be a member of the Audit and Risk Committee. So the section within the Academy Trust Handbook that deals with that is sort of 3.9, 3.10, 3.11. And really what it's saying is that the chair of the overall trust or the chair of the Finance Committee shouldn't also be the chair of the Audit and Risk Committee, but it's not prohibiting that membership, mixed membership across both committees. There was another question, Catherine, picking up on the related parties. I think this was something that had come out from one of the case studies, and let me just find the question. Are related parties only at trustee level? What about members, local governors, other senior staff?
Yes, so the key people here are the central trustee governance, the governors at the actual MAT level, but the Academy Trust Handbook does also state that all members, trustees and local governors should complete the Register of Interests, so that you do know if you do have any potential conflicts of interest. I think I would say, whilst the formal disclosure relates to the MAT level trustees, I'll describe this as the front page of the Sun test. So if you wouldn't want to see a related party transaction appearing on the front page of the Sun, then it's probably something that shouldn't be happening.
Thank you, Catherine. There was also a comment that was put in the chat about the Academy Trust Governance Code. So this again is a voluntary code for the sector, which has been put together by a collaboration of sector organisations. So that came out towards the end of last year. So when we do the follow-up, we can put a link to that as a relevant publication to review, as well as some of the other links that we've had in the slides already. So you will receive that. There was also a follow-up question around management accounts. So there was one earlier on, Catherine, following your session, and then there's been an additional question, possibly after what you were commenting on, Saatchi. So I'd perhaps sort of ask both questions, and then Catherine, maybe you can start and hand over to Saatchi. So if there is an effective Finance and Audit Committee in a MAT, do management accounts still have to come to the board for all trustees to see? And the sort of related question is whether the board should see quarterly, the entire board should see quarterly management accounts.
I think there's potential to get into a debate on this one, to be honest. So my starting position would be that if the F&A committee is working effectively and they're reviewing the monthly management accounts, there probably is an argument that then the full board don't need to see the monthly management accounts, but possibly picking up the follow-up. It is important the board do know what's going on from a financial perspective, so maybe once a quarter bring them to the board meeting. But Saatchi, I'd be interested in your perspective as well.
Yeah, I totally agree. I think as board members, whilst you can delegate your responsibility, that the sort of financial challenge is done by the finance committee, you can't abdicate, and it is important for the board that it doesn't just become a sort of once a year exercise by looking at just the statutory accounts. There will be decisions you make as a board which will be based on the financial reporting in the year. So I would say as a minimum quarterly. I mean, it may well be that you do termly accounts and it's not quarterly, but certainly either termly or quarterly is very much encouraged.
Thank you. some questions coming through around reserves following that last session, as I would have expected. So the suggested reserves guideline is 5%, seems low. Is there anything published across academies to show what the mean or average might be? And there was another comment as to whether we might be able to provide any further insights into appropriate reserve allocation. So I don't know, Sachi, if you want to start on that, and I know we do have some publications that we have that might be useful you could refer to, and we could share those following the event as well.
Yeah, absolutely. So yeah, yes, there is various benchmarking, and funny enough, we are in the process of doing our very own benchmarking report at the moment, which will show averages so that you can compare not just a sort of a blanket average, but in terms of the size of the mat. 5% is low, but I suppose the 5%, and I think just on behalf of the ESFA, I think that they are saying these are guidelines. They're not necessarily saying they would be appropriate, because possibly for another academy trust, you know, if it's got plans to merge and it needs funds, even 10% might not be appropriate. It needs more. So it's the context of where you are, what you plan to do is extremely important in setting your reserves policy. And what I would say is there is no magic formula. I often get asked, what do you think our reserves should be? And I always think, well, you know what, I would have to be on your governing body and be aware of your own challenges, what your future plans are, to be able to make that contribution in any meaningful way. But I mean, typically, you know, and this is again without any this simplistic way, but you know, we have seen sort of 7-8% of operational income as a reserves figure. I think a few years ago the ESFA, well, not, and this was again, they weren't saying should, but they were saying potentially think about it in terms of how many months payroll you want to hold. And in the old days, when there was a bit more cash lying around and it was a new sort of sector, 2 months, 3 months was very aspirational. Now most academy trusts would struggle to have that, if you know, so even 1 month's payroll is a desirable. But there's various factors to consider, and I think engaging with the benchmarking by the board and finance committee members at least once a year is a very healthy exercise, just to you know, as part of your own reserves policy setting.
Thank you, Sachi. I think probably that is all we've got time for today. There are a few questions that do remain, so we will, as I said at the beginning, sort of do a follow-up after the event. You will receive the recording so that you can watch it again at your leisure or share with fellow trustees. We will share the slides, and we'll also share a response to the various questions and link through to some of the key documents that we have referred to in our answers. So I think all that remains is to say thank you very much for attending. Thank you.